Next up here, let's talk about SoFi. What's going on here? My perspective on this, when the stock will beast, PayPal, we'll get into after that, okay? So the reason I thought it was important to speak about SoFi here today is because I saw this on X last night. And it said, I sincerely apologize to anyone I convinced to get in a SoFi stock starting 4 years ago. I've been beating the drum ever since then, saying this quarter will be different for the stock price. I'd be lying if I said this hasn't been a burden on me. Still long, but down. It says this individual, right? And I understand that sentiment. This person responded with, I always find the strongest supporters, when the strongest supporters throw in the towel, that is when you want to start building out your positions. Wall Street will reward the stock eventually, just not on our timeline on theirs. That is true. That is true as well, right? But I understand the sentiment. People that, if you get in a stock at the wrong time, even if it's a great company, even if the company's growing and doing all the right things, if you pay the wrong price for a stock, you're setting yourself up for years of likely disappointment, right? And so if we go back in time, we look at SoFi, just to be honest with you guys, this stock was not a buy years ago. It just wasn't. The losses were climbing for the company. The fundamentals were not in a good place for SoFi back then, right? It was a mess of a company, and I would say it was near impossible to value this company back in those years, okay? And so you got to understand, it's not just about, I like this company, I believe in their product or service. It's about, you got to look at those financials, you got to try to figure out a valuation that makes sense to be a buyer of. And if it doesn't get to that valuation, then you don't have to buy it. There's plenty of fish in the sea. SoFi is one of just, thousands of stocks in the stock market, right? Now, if you look at SoFi now, right, we can actually start to assign value to it. It actually has positive net income now, right? It also has much bigger revenues as well. So if you want to put them on a price to sales ratio and use something like 1000xstocks.com to compare them versus other big banks, you could do that in a matter of seconds. It wouldn't take you much time at all, right? But if you just want to look at like the bottom line net income, we can actually assign value. So company, let's say this past quarter earned around $88 million roughly net income. So let's just call it 90 million, right? So now you can at least start to play around with valuations and see if it makes sense to buy the stock or not. So you can say, okay, company earned around $90 million, times that out by 4 quarters. Maybe that's net income of $360 million over the next year or so. If you want to slap like a 25 PE, which is around where Apple's at right now, right? Keep in mind, SoFi's obviously growth rates are massively above somebody like an Apple, which is literally negative right now. But let's just say it's an Apple-like PE ratio, 25. So then you're at about a $9 billion market cap. So okay, like a $9 billion market cap is roughly fair. If I think it's like a 25 is about right, and I think they can bring in $360 million of net income, right? Let's say you think companies should be at like a 44 P because you're looking at it and you're saying, this company is very early days. They're very, very early on in the profit cycle and their net income cycle. So to say 25, that's like what you would put a value stock at. This is still a growth company, so they should command like a 40 P. Then you can say, okay, 360 times a 40 PE, then you're at like a $14.4 billion market cap, right? Now at least you can assign value to this. You couldn't assign value to it back in the day, in my opinion, because they didn't have a positive bottom line. They had a growing losses and epic losses at that. And they were growing massively, right, back then. Plus, their revenues were very minuscule back 4 years ago, 5 years ago versus where they are today, right? So I don't think you could even accurately value it on a price to sales ratio if you want to compare them versus peers either back then. So I think nowadays you can actually treat SoFi like a real stock and actually value it, right? And so when I look at SoFi here today, market cap's around $7 billion-ish or somewhere around there, right? I don't think it's the time to really be a discouraged seller in regards to SoFi. I think 2024 is actually the first time to be a buyer of the stock. You're getting positive bottom line. You should continue to get that unless something freakish happens, right? And you're getting steady revenue growth from this company. You're getting steady member growth, profit growth. I think and you're getting a stock price that has been down for years. I think this is actually a buyable year for the company. And so, but once again, I understand the sentiment. Like if you buy a stock at the bad price, it's very discouraging. And you sit on that stock for years and years and years. But there's a big difference between SoFi 4 years ago versus SoFi today. It's a night and day difference. 4 years ago, that company had massive net losses that were getting bigger and bigger and bigger. They had revenues that were not in the best place. Now, revenues are in a great place. It's a much bigger company, 8 million plus members now at this point in time, profitable on the bottom line. Anthony Noto has proven he can get through all types of situations when you think about everything that's been thrown at SoFi. I think if you look back 4 years ago or so, Anthony Noto wasn't nearly as proven at that particular moment, right? I think now seeing everything SoFi's had to go through over this past 4 years or so, from inflation to Rona to the student loan situation, right, to massive changes in interest rates. I mean, I think it's more of a year to be a buyer than a discouraged seller. That's what I'll say about SoFi overall. And I think the setup is very, very good. When does it blast off? We'll see. But I wouldn't be surprised unless you get a confirmed like recession at some point in the next 6 to 12 months. I wouldn't be surprised if the stock starts to blast off in the next 6 to 12 months. But I mean, obviously, if a recession comes out of nowhere, unemployment goes up a ton, something like that, that's going to negatively affect all stocks, including obviously SoFi in that situation. If you can avoid that, then you're talking. Next thing up here, let's talk PayPal. Upgrades and news in regards to this one. Okay. So first off, MoonPay partners with PayPal to simplify crypto purchases for U.S. users. Popular cryptocurrency buying app MoonPay has joined forces with financial services giant PayPal to provide United States users with a seamless way to buy cryptocurrencies using their PayPal accounts. This partnership streamlines the crypto buying process for millions of Americans, offering them the flexibility to utilize wallet transfers, bank transfers, and debit card transactions directly within MoonPay app, according to CoinDesk. The integration marks a strategic expansion for PayPal as well, which currently offers a limited selection of major cryptocurrencies. With the MoonPay infrastructure, PayPal users will now have access to a broader spectrum of popular tokens. Ivan Soto-Wright, the co-founder and CEO of MoonPay, described the partnership as symbiotic, noting that it enhances the flexibility of users of his platform and extends PayPal's cryptocurrency offerings, right? And this just seems like a very Alex Chriss move. Like, it's just very clear. Alex Chriss is just all about expansion, partnering, doing whatever it takes to make consumers' life as easy as possible. That was the main thing I took away from the conference call, is Alex Chriss is 100% focused on making users' lives as easy as possible. And the old PayPal of what seemed like it made users' lives more difficult, he's just taking all that away. And he's even was talking about, bringing down fees on things like cross-border transfers and things like that. And he's just willing to make a lot of moves that just previous PayPal folks were not willing to make, which is already starting to have a positive effect on active accounts. On a sequential basis, PayPal actually grew for the first time in a long time on a sequential basis. They grew active accounts by 2 million. 2 million new active accounts, which we haven't seen that in a long time in regards to PayPal. So it's clear to me that Alex Chriss is just focused on, we're going to do everything that our consumers possibly want and make our ecosystems as sticky as possible. Next up here, this matters significantly. PayPal clears CFPB inquiry on Venmo. Expects no action from the CFPB after it closed its inquiry into Venmo. So that's a U.S. government agency. If I recall, that agency was founded in around like 2011. I think it was after the great financial crisis and whatnot, right? Consumer Financial Protection Bureau. And so they must have been looking into Venmo for something and not found anything. And so overall, that's good news, because that's one of those situations, if there was something negative found in regards to Venmo, it's a bunch of lawyer fees, obviously, for PayPal. Could be potentially fines if they had found something negative there. And since it looks like it's a closed matter, that's very, very, very good news for PayPal overall in regards to that. Next up here, people are moving price targets all around in regards to PayPal here. Several financial institutions have recently adjusted their price targets on PayPal holdings. Mizuho increased their price target to $68 from $60. So these are kind of bearish folks that are getting less bearish. Evercore ISI adjusted their price target to $65 from $60. Another one that's getting less bearish. Baird raised their price target to $77 from $70. So these are a little more on the bullish side. Goldman Sachs adjusted their price target to $76 from $74, so they went more bullish. TD Cowen increased the price target from 68 to 68 from 58, so they were pretty dang bearish at 58. Jefferies adjusted their price target to $70 from $65. BMO Capital adjusted their price target to $65 from $64. Come on, BMO Capital, $1, seriously? Why even adjust it? Stephens raised their price target to $75 from $70. Marquee adjusted their price target to 85 from 75, so they're much more on the bullish side for PayPal overall. Monez Crisp Hart raised their price target to $88 from 80, so they're on the very, very bullish side, right? JMP Securities increased their price target to $82 a share from 70. RBC Capital raised their price target to $84 from $74. TD Cowen raised their price target to 68 from 58. So, what's the moral of the story from all those price target changes, right? Well, I think there's two morals of the story. First one is up, up, up. Even the bears are moving price targets up left and right. The bulls are moving their price targets up as well, which is good momentum. As Wall Street momentum, we're starting to get in a momentum cycle in regards to PayPal, where you're going to start seeing more and more upgrades as the quarter goes along, as long as PayPal, keeps beating those numbers and keeps, guiding good. You're going to see more and more upgrades, more and more price targets, and you just get into a real nice cycle of like upgrades, price targets moving up, upgrades, price targets moving up, and it actually kind of becomes a self-fulfilling prophecy where the stock just keeps pushing up because more and more people come out and start upgrading it and bringing up their price targets, and it just creates this like positive, very, very positive loop for stock overall. And I think we're seeing the very infant stage of that. I mean, that's incredible. The amount, it just took you through almost every major analyst firm out there, almost all of them were raising price targets and raising price targets. So that's phenomenal. The second thing I think is really good in regards to this matter is, my baby walked in there for a moment, okay? The second thing that's really good in regards to this is, you look at a lot of these analyst folks, they're not that incredibly bullish yet on PayPal. So there's so much room for bullish momentum to the upside here, right? What's the most bullish one I read there? These folks from Monez that raised to $88, these folks are at 85. If you look at RBC Capital, they're $84, and those are more of the bullish folks, right? So when I think about it from this angle, there's a lot of room to let's just call it, get these bullish folks a lot more bullish and get these bearish folks to get off their bears for a moment here, okay? So I thought that was intriguing there. Now, I covered PayPal earnings extensively in this particular video here. It wasn't named PayPal or something like that, so you might not know that was PayPal talked about. But that video I posted here on the main channel a day ago, so if you want to get into the nitty-gritty in regards to PayPal numbers, watch that video specifically because that gets in the nitty-gritty. Now, in regards to SoFi, what are the strengths, weaknesses, opportunities, and threats for SoFi? SoFi, the strengths are, it's a digital-first bank, right, online. Most people use the SoFi app if you use SoFi. And so I think that's a real strength of the company, being that kind of new age financial institution for people, right? The second thing is, I think SoFi really appeals to millennials, Gen Z, I think Gen Alpha, as they're going to enter into the ages that they set up bank accounts and do all those sorts of things. So I think that's really good. They're going to do a good job, in my opinion, of capturing the next generation that will grow their wealth immensely over the next 10, 20, 30 years, right? And then hopefully those people will stick with SoFi as their wealth goes up and up and up over the next 10, 20, 30 years, right? Third thing I think is a strength for the company is got an ecosystem of products. And when I say ecosystem of products, it's like once you sign up for one of their products, they're probably going to get you in another product, another service. And you even look at what they're doing with Galileo on that side. It's incredible. So they definitely have an ecosystem of products. Fourth thing I think is a strength for the company. Unlike Starbucks, it was a weakness, right? For SoFi, I think Anthony Noto is a real strength of this company. I think he's a very brilliant mind. If you look at his pedigree and where he came from before he was at SoFi, he's held a lot of very, very important positions at several different companies, and one of those was Goldman Sachs. And so ultimately, I think he's a strength of the company. And the fifth thing is liquidity position. They're not even remotely close to maxed out on what they could be doing for loans and those sorts of things. And if you look at regulations and what they would need to hold regulation-wise, they're not even remotely close to exceeding capital requirements or something like that. So they are in a really good liquidity position. As far as weaknesses for the company, I think customer service is a little bit of a weakness. Even my brother-in-law, I was talking with him recently. He did a product with SoFi, and he was at the end of the day, the gist of the story was he didn't walk away with like, SoFi's got good customer service. It was kind of the opposite situation. He didn't like the customer service at SoFi, okay? Second thing is, it's not like you can with traditional banks, let's say you signed up with Chase. Well, you can drive down the street. There's probably a Chase 3 minutes, 5 minutes, 7 minutes from you. And you can go in there right now. Not right now. I'm recording this on Sunday. But basically almost any other day, Monday through Saturday, and go speak to a banker, right? So customer service, I would say, is a weakness for the company as of right now. Second thing is traditional bank stickiness. The problem is when somebody's in an ecosystem, they're going to likely stay in that ecosystem unless the current ecosystem, makes them mad or something like that, right? And so if somebody's been a customer of Wells Fargo for 15 years, it's going to be hard to win that customer away, right? Same thing with a Chase or a Bank of America or some regional bank and things like that. So, this is like something that's good for SoFi long term if they can capture the next generation. But in terms of trying to get baby boomers over to use SoFi and things like that, very, very difficult. Third thing I think is a weakness for the company is ultra wealthy clients. SoFi hasn't really built out the products and services yet to really attract people with $10 million net worth, $50 million net worth, $100 million net worth, where somebody like a JP Morgan Chase really, really capture that audience very well, and there's a few other companies out there. So they don't necessarily have that $100 million client. You're not really looking to go to SoFi for that as of right now. 10 years from now, it could be a different situation, but as of right now, no. Fourth thing is their past financial statements are very, very bad, very, very bad. So that's something to keep in mind. If you look at SoFi's numbers over the past 5 years, especially as far as the bottom line, they're not very impressive. The revenue growth is very impressive, but not the bottom line, right? And the fifth thing is there's really no legacy behind SoFi that benefits a lot of these other companies. You think about JP Morgan Chase, and you think about JP Morgan, the original super successful banker. You think about Wells Fargo, and you get these images of like a horse and a carriage, and back in the day, they were carrying money around with horses and stuff like that. So they don't really have that sort of legacy like a lot of these other banks. Now, opportunities, there's a lot of opportunities for SoFi. These are the 5 main opportunities in my opinion. One is to increase profitability. They just barely reach profitability, and I'm talking in the last few quarters here. So they got a lot of room to increase that profitability over this next 3, 5, 7, 10 years. I can tell you that much. Second thing is continue to grow market share. They're clearly taking market share. The more and more customers they keep gobbling up, they're just going to continue to take market share from their competitors. Third thing is word of mouth as they scale out. I think this is big because the thing is the more people that use SoFi, the more people are going to tell their friends, their family members, hey, using the SoFi service, it's pretty awesome. You should sign up for them, right? And so I think that's big. Imagine, like the newer generation talking to their friends about, hey, I need to set up a bank account with direct deposit. Who do you bank with? Oh, I bank with SoFi, right? This is very, very valuable. And like, oh, how do I set that up? Oh, just get the app and then you can, do this here. Like, that is always such a super valuable thing, okay? Incredibly valuable. And so the word of mouth is massive for this company, right? Oh, I just got a loan from SoFi, blah, 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 at this rate to pay down my credit card that was at this rate. You should do that as well, right? I mean, those sorts of word of mouth things, those, where friends and family are talking, so valuable. Fourth thing is, trust over years. So the longer we go here and SoFi is a successful company, the more trust they'll continue to build and build and build because SoFi is still, in the banking system, SoFi is still relatively a new player, right? And so as the years tick on, SoFi is going to build more and more trust naturally as they've been in the market longer and longer. And the fifth opportunity for this company is, if you think about SoFi, it's US, right? Maybe in 10, 20 years, it's seen as an international company. So outside the US is a huge opportunity long-term for the company, right? Threats, I think apps like Cash App, Venmo, PayPal, these sorts of things, if they continue to push further and further into things that could compete with SoFi, that could be a threat. As of right now, they haven't done it yet really so much, right? It's not like you're going to Cash App or Venmo or PayPal to really set up a bank account or even a savings account. Like people aren't really going to do those sorts of things, right? But if they keep kind of pushing and pushing and pushing over the coming years, it could be a threat, right? Something to keep an eye on. Another threat, I think, is Apple and Google, right? Is iOS and Android, are they going to get more serious about trying to be the banking customer because they view that as a stickiness? Apple and Google, they don't want to get into banking because they're like, oh, we're going to make money from banking. They would just want to become people's banks, so it makes this ecosystem even stickier because it's like, oh, I have my bank account through iOS or Apple or something like that, right? So that's another kind of, I think, potential threat. We'll see. It hasn't, materialized in anything yet, but threats are things that might not have occurred yet that could be occurring in the future, right? So something to just kind of keep an eye on there. And we know Apple's having a lot of trouble moving iPhones. So does Apple want to try to get into banking and try to make their product stickier? I don't know. iPhone units down 10% last quarter, year over year. That's bad, right? Third thing is traditional banks upping their tech, right? So traditional banks are usually seen as not very tech friendly relative to somebody like a SoFi. So, but if these, I can tell you these financial institutions are spending a lot on tech, especially somebody like a Chase, if they continue to spend, maybe they are seen as just as good as SoFi over time, right? Fourth thing that's a threat to SoFi, and this is a threat to honestly all banks, recession, right? In recessions, it depends on how bad the recession is, loans aren't paid, right? People's credit goes down, which means you can't give as many future loans. It's an ugly situation to go through. It's a threat to SoFi. It's a threat to everybody that's in the financial space, right? Fifth thing I would say here is if rates moved very unfavorable and they moved there fast. So SoFi does a lot of very intelligent things, and Anthony Noto positions the company very intelligently in terms of like hedging portfolios, selling off certain amount of loans and things like that. They do a lot of brilliant things. But let's say there's some sort of phenomenon where rates went up very substantially, much more than SoFi or anybody anticipates. So let's say inflation started getting out of control again, right? And let's say the Fed had to raise rates considerably. That could be a threat to SoFi if they're not positioned for that, right? And it's impossible to really know exactly how SoFi is positioned because it's banking, right? And so not everything's going to be crystal clear. You just got to kind of put the trust in the management team overall. Let's say rates dropped off a cliff all of a sudden. Is SoFi ready for that, right? Maybe they are, maybe they're not, but it's something that has to be considered out there. So that's banking, okay? Alrighty, so that's the strengths, weaknesses, opportunities, and threats, the SWOT analysis of both these companies. So now let's get into valuation, and then we'll talk about if Starbucks and SoFi are a buy now, and what are kind of the prices that make sense, okay? So 1000xstocks.com. The reason I built this service is so things like this could just cut down my amount of time spent. I mean, something like this would have usually taken me an hour plus to find out all these numbers and metrics and things like that versus nowadays, like it literally happens in seconds for me now that I have 1000xstocks.com, which I think we just hit 400 plus people on the wait list. We opened that about a week or two ago. So if you're looking to join the wait list for 1000x, go to 1000xstocks.com and join the wait list there. We got monthly plans, yearly plans. We could probably get you in maybe in the next few weeks. Okay. So SoFi obviously trades at a ridiculously high forward P, and it has no trailing 12-month PE because they were unprofitable, right? So that forward P is very scary. Many stocks traded kind of in the 20 to 28 range, somewhere in there. I mean, yeah, SoFi at a 74, no bueno. But remember, they're at an infant stage of profitability. Also remember, this company's got very nice revenue growth. Analysts have been bringing down their expectations, but the revenue growth expected for SoFi is significantly above where an average stock is in the market. So is a forward P at a much higher number than where a traditional stock is at? Sure. But the growth rates are also significantly above where traditional stocks are at. And the company just got to infant stage of profitability. The other thing to consider is the earnings per share growth. Next year's earnings per share growth is expected to be 160% roughly. That's an incredible number, guys. Absolutely incredible number. So that's something to factor in there, okay? So whenever you're looking at a stock, you don't want to just look at it and say, okay, here's where traditional, stocks. You also want to look at it versus other companies. So I want to put SoFi against fintech companies like PayPal and Square, and then we're also going to put them against more like traditional banks, right? Now, to comp SoFi against fintech's tough because fintech's got different business models than a SoFi does. SoFi is more of a bank. PayPal and Square are more traditional fintechs, right? It's also hard to comp them against banks, traditional banks, because those are very well established, low growth, super profitable companies, right? But we still got to try to, compare these companies against each other. So this is going to always look very ugly for SoFi because they haven't been profitable, right? So these sorts of metrics are going to look very ugly. And the forward P is going to make the company look very ugly as well, compared to someone like a PayPal that trades at a 12 and somebody like a Square that trades at a 20. But the thing is, right, Square has been benefiting huge from crypto because crypto has been on an insane bull cycle for really the past 12 to 18 months. So that's benefited Square in a massive way. And then PayPal has been profitable for a long, long time. So they're just much more of a mature company than a SoFi that's just getting the infant stages of profitability at this point in time, right? So SoFi, I would say, $10 to $11 range is kind of like, a good place to, small buy. $8 to $9 range, I think, is kind of a medium buy for the stock. $6 to $7, I think, is a strong buy. So right now, the stock's in that range. And so I view SoFi as kind of a strong buy right now. It really makes sense to buy SoFi stock. I think it's impossible not to be attracted to buy SoFi stock in this range it's at right now. Given the growth rates, given where the profitability should go over this next 3, 5, 7 years, it should be like night and day difference. Like if you look at SoFi's financials 5 years from now versus today, it should be a very different place. If it was to go in the $4 to $5 range, then it's kind of a load the boat buy opportunity. I don't know if that's going to happen, just to be quite frank with you guys, okay? Alrighty, hope you got a lot of value out of this video here today, looking at SWOT analysis, looking at valuations, and trying to figure out if these stocks are buying and what prices make sense. Appreciate y'all joining me as always. Thanks so much for being here, folks. If you're looking to apply, join my private group. If you enjoyed this video, you'll definitely enjoy my private group because those course curriculums go so in depth on so many different subjects and, growth rates, how to value these stocks depending upon different growth rates, trying to figure out good pricing, just immense amount of things, income statements, balance sheets, all sorts of things. Apply with the pinned comment down there and we'll see if we can get you in there in the next week or two. And then you also get access to our Discord community and exclusive videos I produce weekly in there. Much love and have a great day.